on our channel, Merisem NG, so you can also watch that there. So after this webinar is going to be done, it will drop there, and you can go back to replay to find out any information you may want to go back to. And also there would be a feedback form in the chat box to fill out your questions or your suggestions, or whatever you think. And as the webinar goes on, we'll also have there's also the Q&A box where you can drop your questions that will be answered by our staff. So today on the panel, I have with me Yusuf Ogumbi. He's our head of commodities trading here. And he has such a broad experience in the commodity space. That's why, we're so excited to speak to him and for him to speak to us here. I also have Fumilola. She's our head of wealth advisory here. So Yusuf is a highly skilled executive with experience which cuts across management consulting, investment banking, and product structuring. He also has experience in trade finance, commodity trading, and trade operations. He started his career here as an equity research analyst before joining FX Commodities Exchange. And at FX, he participated and spearheaded projects that culminated in designing frontier financial products in the commodities ecosystem. He has also been responsible for utilizing these products to raise up to 300 billion for companies operating in the commodities market. And in 2022, he switched from the financial side of the commodities market to the fiscal side and led a dramatic improvement in the operations and trading of one of the largest agricultural trading houses in Nigeria. He also oversaw the expansion of the company, trading up to 350,000 metric tons of commodities, both domestic and for exports. And he expanded logistics efficiency by 300%. He currently has the Commodity Solutions Desk at Meristem Wealth Management Limited, where he oversees the trading of commodities across the agriculture and energy commodities. He also designs investment products for investors and provides risk management advisory services to clients operating in the commodities ecosystem. Welcome, Yusuf. Nice to have you here.
Yeah, glad to be here again. It promises to be an exciting session. Glad to be here again. Thank you very much, Ifoma.
Thank you so much, Yusuf. And now we also have on our panel Fumilola Adekola Daramola. She's our head of wealth advisory here, and we're so excited to have her here. Welcome, Fumi.
Thank you so much, Ifoma. I'm so delighted to join this conversation.
So Fumi is also a private wealth manager, and like I said, she's our head of wealth advisory services at Merisem Health Management here. She has over 17 years experience providing financial advice to high net worth individuals and institutions. Her vast understanding of the investment workings has enabled her to utilize the skill to lead a team of seasoned wealth advisors to create personalized plans for clients. Her stint in banking and wealth management makes her a valuable resource in business development, relationship management, and financial advisory service. She holds a master's and bachelor's degree in biochemistry from the University of Ibadan. She's also an associate of the Chartered Institute of Stockbrokers and an affiliate member of the Association of Chartered Certified Accountants. Fumilola is highly committed to her crafts, and she is a talented member of Meristem Securities Limited. So glad to have you here, Fumi.
It's a pleasure.
So we're going to start. This is mainly going to be like a question and answer. And like I said, if you have questions, please drop it in the question and answer box, and then our staff would also attend to that. So I'll start with you, Yusuf. I would like to know, what are the main categories of commodities available for investment?
So thank you very much, Ifoma. Thank you very much, everyone, for joining us this afternoon. So back to your question. For commodities, we have 4 broad classes of commodities. And I think just to warm up to the session today, we'll be taking a bit of comment from the last webinar so we can refresh our memories, right? So commodities, we have 4 broad classes. The first one is what we call the soft commodities, and that's literally what we eat every now and then. The grains we consume, the oil seeds we consume, the nuts we consume. These are basically what we call the soft commodities. You have your maize, you have your rice, you have your sorghum, you have your cocoa, you have your ginger, you have your sesame, as the case may be. That's what we call soft commodities. Then we have what we call the livestock and meat commodities. These are commodities that basically come from animals that we consume here and there. So you have your chicken, you have your beef, cheese, dairy products generally, pork in some instances as well. These also fall under the livestock and meat commodity class. Then we have the energy commodities, which we are very, very much used to in Nigeria. Crude oil is the mainstay of the economy in Nigeria. So it's a form of energy commodity. You have natural gas, CNG, that we've come to hear now every now and then recently, LPG. A lot of these energy commodities fall under this particular class of commodities as well. And lastly, we have what we call the metal and hard commodities. And that's where we have a lot of the very durable, robust commodities that we have. You're looking at aluminum, you're looking at iron ore, you're looking at gold, silver, platinum, as the case may be. This is a class that houses all of these commodities. They are used more in the construction of houses, construction of items here and there, cars, construction of bridges, and that's what we have. The 4 broad classes. You have the soft commodities, you have the livestock and meat, you have the energy commodities, and lastly, you have the metal and hard commodities. All of these commodities are generally designed into investment products globally. More specifically in Nigeria, to be more specific to answer your question, we largely have the soft commodities and then gold as investable products that we've seen being developed in the country so far and approved by the Securities and Exchange Commission. So literally that's what we have currently.
Thank you, Yusuf. So just to reiterate, because whenever we hear commodities, we always, the main thing that comes to mind is, agriculture, maize, soybeans. But now you've made us to understand that we also have the energy class, we have the metal class, we have the agriculture, and we also have livestock and meat. Thank you. And just to mention again to our audience, this would also be streamed, is also streamed live on our YouTube channel, Maristem NG, and also there will be a recording there after we are done with this session. Thank you so much, Yusuf. We'd also like to know, since this webinar is building a commodities portfolio, so we'd like to know what kind of investment instruments are commonly used to gain exposure to commodities.
The way I would like to characterize it is I would divide it into 2 broad classes. So the first one is what we call professionally managed instruments. These are instruments that are managed by licensed, SEC licensed, Securities and Exchange licensed entities such as Meristem Wealth Management Limited. So you have your fund managers, asset managers managing these instruments. And then you have the class of instruments that are not really managed by the SEC licensed entities. They are majorly managed by investors themselves. The first one under the investor managed class is what we call the spot commodities. And these are securitized versions of these commodities that we have here and there. They are available on exchanges in the country. And these are instruments that investors can easily take advantage of. They go on the platform, they buy these instruments, of course, after taking into cognizance the necessary analysis and the research that backs that transaction, right? The second one is what you call commodity linked equity instruments. So these are everyday stock instruments, equity instruments that investors can then leverage as well. So businesses such as stocks such as Seplat, Oando, Okomo, Presco, these are stocks that have commodities as the underlying business. So if you have this kind of stocks, you are able to leverage on them to gain exposure to commodities as well. On the other hand, you now have professionally managed instruments. So you have the exchange traded commodities, ETCs, that we are mentioning here. These are professionally managed instruments that take into cognizance the nature of the commodities that form the pool of this instrument. So basically, ETCs have basket of commodities, more or less, probably maize, sorghum, depending on how the fund manager decides to design it. And then these are managed by the fund manager to ensure that investors are able to maximize their returns and protect investor funds. The second one is what we call the commodities funds, and the commodities fund they are managed by the fund managers privately, and the investors are able to access this kind of instruments as well. Both classes of instrument, the professionally managed one and then the investor managed class of instruments, are available publicly in the country. For the sports commodities, you have them available on the commodities exchanges in the country. For the commodity-linked equity instruments, you have them available on the equity exchanges in the country. For the ETCs and the commodities fund, that's also have been developed in the country currently. And then you have the Securities and Exchange Commission, basically meant to approve all of these instruments once they pass all the guidelines that they've instituted as guidelines for these instruments, basically.
Thank you so much, Yusuf. I was taking notes, a lot of notes as you were talking. So you said, and you let us know that to build a commodities portfolio, one can have exposure to one or multiple categories of these things you mentioned. You mentioned spot commodities. You mentioned commodity-linked equity instruments. You've also mentioned professionally managed instruments and commodities funds. So, we don't need to be restricted to one. We can invest in one or multiple of these things to build our commodities portfolio. Okay, that's so fantastic to hear. Thank you so much. Over to you now, Fumi. As an experienced wealth advisor and, as one that has been conversant with clients' needs, investment needs and such, why should investors consider adding commodities to their portfolios?
So thank you, Ifoma. And this question is coming at a very great time. We know what the economy is doing right now. Inflation rate is currently above 33%. And most of the conversations that you would find clients have with you is to say that, most especially for fixed income instruments, there's actually negative returns when you talk about what inflation is doing compared to what the returns they are getting on this kind of instruments. So bringing in commodities at this time is a very good thing to start, as in it's a very it's really very important at this time to be able to bring in the commodities investment into clients' portfolio. And basically, I think the three major benefits of doing this is to start with inflation. So you need an investment that can hedge you against inflation. And I think the commodities instrument really does this, because it moves in tandem with what inflation is doing, because commodities basically move based on demand and supply. So you would see that when inflation rates are going up, commodity prices are also going up. So it would be a very good tool to use to hedge your portfolio. And secondly, diversification. We always preach the fact that you have to spread your risk. So it's a good way to spread your risk, knowing fully well that it has very low correlation with the stocks and also even with the fixed income instrument. So it's going to be a very good tool to diversify your portfolio. And most importantly, for most investors, which is what most investors are always very interested in, is maximizing their returns. So because it has these two functions that it plays, it would also help potential investors to maximize the kind of returns that it can get, which is really very important for us. But to cap it all, very importantly, before we would definitely talk about how it's good for you, you also have to then check your risk profile in tandem with what you're investing in, as in the kind of commodities that you'll be putting into your portfolio.
Thank you so much, Fumi. What you mentioned is actually very, very, very important. Inflation, number one, and also diversification. And the commodity space is very interesting because, as Yusuf has previously let us know, there are different categories and there are different classes. You have metals, you have agricultural products, you have commodity instruments. So, one doesn't have to be restricted to one particular thing. And because it's moves in line with inflation, it's a good means to hedge one's wealth. So thank you so much for that and for letting us know why we should consider adding commodities to our portfolio. So now, it's good we're learning about commodities, but there cannot be, any movement if we don't look at the risk associated with it. There's nothing that is 100% or foolproof or, guaranteed. So Yusuf, would like to know, we're interested in investing in commodities, we're interested in building our portfolio, but what kind of risk are associated with commodities investments?
Yeah, fantastic question, because everything has their pros and cons. So investors have to be aware of what they are getting into. First of all, very importantly, because commodity instruments are literally part of what we call variable income instruments. So that means that your return is not fixed. And you can't say, oh, once I put my money here, I'm making 30%, 20%, 10%. It's not guaranteed. It's an environment that is very dynamic, and you have to pay attention to what we call the price risk. So that means the likelihood of prices going up or down. So you have both exposures. So as much as you are trying to say, oh, the prices can go up 10%, 20%, you should be aware as well that those prices can also trend downward. So that's a risk that investors have to pay attention to. And for us, how we think investors should mitigate this kind of risk, is to pay very close attention to the commodity they are investing in, similar to the way you pay close attention to any equity instrument you are investing in. Carry out your due diligence, carry out your analysis, ensure that the research backs what you are trying to invest in, not just hearsays, bandwagon effects, and all of this typical behavior we see in the market these days. Pay very close attention to the commodities you are investing in. So that's one. Secondly, once you invest, you also have to be actively involved in managing your portfolio, especially for investors that want to do it themselves. You want to ensure that you're not just investing and leaving it wherever it is and forgetting about it. You are paying attention to what's happening. You are monitoring the transactions you've executed, and you're ensuring that the thesis, which is the basis upon which you've invested in that commodity initially, continues to remain valid. That's two. Thirdly, because we also know that we have what we call professionally managed funds, you then want to take advantage of professionals that do this on a 9 to 5 every day of their life. They are thinking of these commodities more or less. But then you also want to ensure that that person has the necessary expertise. This individual has track record to show for what they say they can do, and they are able to deliver on the returns that they've promised. So take, for instance, I come meet you telling you that, oh, you can invest in commodities with me and I can deliver on the returns. The question you should be asking me is, have you done it before? How long have you been doing this? And what's the historical returns you've posted in this market? So that is how you should evaluate every individual, every professional firm that you are working with. You have to evaluate the track record, historical performance, and the ability to deliver on that particular promise they are giving. Very importantly as well, because this is a very regulated space, investment funds are not just supposed to be given to every Tom, Dick, and Harry. You have to ensure that these entities that are claiming to do XYZ have the necessary licenses to do it. Otherwise, you are just giving out your money to unknown entities, and we know anything can happen. In that case, if you give your money to, if you invest with a licensed entity, there's the Securities and Exchange Commission that can come in and protect investors at the end of the day. However, if you do it with unlicensed entities, there's no regulator that can come in and checkmate their activities. So like I said, the first risk is the price risk. Be sure that you have enough basis, enough research to back the decision you are taking to invest in any commodity. Number two, it's a very dynamic environment. You have to pay attention to what you've invested in, and you want to be sure that the facts behind the investments continues to remain valid. And number three, you want to fact check. I think that's a popular word now. Fact check any entity that is coming out to say they are carrying out XYZ. Number one, be sure they are licensed by the Securities and Exchange Commission. Number two, ask for their track record, the historical performance for anything they are saying they've done. And number three, be sure that they can deliver on any of the promises they are giving you. So that's how I think investors need to review the risks and how they can mitigate some of these risks as well.
Thank you so much, Yusuf. That was so
Can I
helpful.
add to that?
Yeah.
From a client's angle, as in having dealt with clients, I think also very importantly, you have to also be sure personally that it matches with your risk profile such that the kind of commodity investments that you're doing matches with your risk profile. Do you have the willingness? Is another thing to have the willingness, then is another thing to have the capacity to do that investment. And also very importantly, which is always most times the function of the kind of feedback that you have from clients, is also the fact that the liquidity needs. So what are your liquidity needs? Does it match with the tenure of the investments that you're doing? So those things, you have to really check that out and make sure that it aligns with your investment objectives, so that you're not going into an investment just because you feel that's the trend or that's what will give you the maximum return at that time.
Thank you for me. So just to clarify, your profile is high net worth individuals, but Meristem welcomes all investment classes, right? So, sometimes when people hear investment, they say, oh, I don't have money, I can't invest. But you don't have to be a high net worth individual to invest, right?
No, you don't. Like Yusuf earlier mentioned, you have the ETCs wherein you don't have to have a lot of money to do that investment. So, and you can also do commodity linked exchange traded funds. So you don't have to have a large sum of funds to do those kind of investment. And most importantly, for the ETCs, it's professionally managed. So it takes away that headache from you. But you have to be informed. You don't have to leave that 100% to the person managing it. You have to be informed enough to at least monitor and see what is being done on your portfolio.
Thank you so much for me. And just to mention again, this will be streamed live on YouTube on our channel, Meristem NG. You can also use the Q&A box to drop your questions, which will be answered. And there's a feedback form in the chat box where you can fill it to let us know your opinions and thoughts. Thank you. Okay, so we've spoken a lot about risk profile, what commodities are, different classes of commodities, what are the benefits. So now we'd also like to know, what is the typical time horizon for investing in these commodities?
Fantastic question. I think it ties back to the comment Fumi made about the ability of the investor, not just willingness, but your capacity to also execute that investment decision. So for time horizon, it's not really limited. It's actually a very liquid market that we've seen in the commodities market in Nigeria generally. We see that investors are able to come in and exit quite frequently. More importantly, let me categorize it into these two buckets. So there's the part where the investor can actually come in and exit at any point in time based on their interest, right? So the liquidity supports that. The other extension is what's the investment horizon from your own angle. So there's the investment horizon as allowable by the markets. Yes, you can execute this. So take, for instance, I can buy, let me use the case of equity instruments. I can buy GTCO today and sell it tomorrow. The market allows that. But then what's my own horizon as well? Am I looking for an instrument that can allow me invest for long term? And there are also instruments in the commodities market that allows for that. So take, for instance, I'm sure the ladies amongst us will know, if you had bought gold, a gram of gold 5 years ago versus how much it's worth today, that's a long term investment actually. Be careful when you go close to that jewelry box next time, so because it's a lot of money that's in there now. So again, what I'm trying to say is the market allows you to come in. It's liquid enough to allow you to come in and go out, but also you also need to choose your own investment horizon, and then on the back of that, choose the investment, the commodities you want to use to fulfill that investment horizon at the end of the day. I hope that answers the question.
Yes, he answers it perfectly. So riding on that, thank you for letting us know the time horizon. Like you mentioned before when we're talking about risk, the first thing you mentioned was that these instruments are variable income instruments. So we'll also like to know, how does this cyclical nature impact the ideal investment horizon?
Interesting question, and this is where the nature of the commodities come into bear. So first of all, for agricultural commodities, soft commodities, they have a more frequent cycle. So it's literally every year. You typically in Nigeria, we harvest around November, December, and that's when the commodities are cheapest. So a lot of us will be going to the markets today and will be saying that, oh, the price of these commodities, of this food stuff, of all of these things have dropped. Yes, because we're in the harvest season, they have dropped. But then as we go through the rest of the year, going into March, April, we typically would have consumed a good chunk of what we've produced. And that cyclical nature also affects the pricing of these commodities. So you see some seasonality in terms of pricing. They come down during November, December, and then they pick up again around April, March. So that kind of cyclicality exists. But for some commodities such as gold, they have a long-term cycle, more or less. Their cycles are tied to global demand, their cycles are tied to global economy, and that way you are able to ride a longer cycle, more or less. So at the end of the day, the nature of the investor is very critical. The profile of the investor is very critical. Am I just looking for an investment that gives me a cycle within 1 year, or I'm looking for an investment that I can tie down, I can sit with for a longer period of time and be comfortable that the cyclicality wouldn't upend the decision I've taken, more or less. So that cyclical nature is also inherent in the commodities, and that's why we don't just advise people to buy commodities. There has to be some rationale behind the decision you are taking. There has to be some thinking, some thesis, as we call it, behind the decision you are taking to buy the commodities. So it's very critical that we also understand who the investor is and their objective at the end of the day.
Thank you so much, Yusuf. Thank you. We have some burning questions from our attendee, which I think will be good to answer here in this session. So someone is asking, how much is needed minimally to invest in any of these commodities?
I think I'll leave that to Fumi. Fumi is their best friend.
Okay, there is no maximum amount, but in terms of minimum amount, I think that would be tilting towards the professionally managed mutual funds. So I think basically dependent on different asset managers and what they use as their own minimum, but I would expect that if it's like 100 naira to a unit, so maybe like a 10,000 to 100,000 would suffice to start the investment. But definitely, if you're going to the big market, as in you want to physically hold the instrument or some other things that you want to do, then definitely the amounts that you'll be using will be higher. But to start with on a small level, I think between 10,000 to 100,000 would just suffice.
So you see, you don't have to have millions of naira or dollars or pounds to invest in that market. With 100,000 naira, anyone can enter into that space. Okay, thank you. So someone else is asking, in year 2024, how has the commodities market fared? I know, you answered that there are different classes. So maybe you can just pick one or two and, answer our audience member on how the commodities market has fared this year.
It's been a roller coaster this year. There's been a lot of what we call topsy-turvy, more or less, in the market. So let me give you a timeline, right? So January till around June, we saw crazy moves in the prices of commodities. January to August, actually, we saw crazy moves in the price of commodities, somewhat touching 25, 30, excess of 30 in some instances, for a number of commodities in the country. The interesting as well. So as those prices are appreciating and then investors may be benefiting from it, the everyday man on the street would also feel the price rally in there based on what you buy in the market, the pocket size that you're now able to afford. It's actually tangible. So the moves in prices that we saw was actually significant. In September, coming into October, we saw some declines as we approached harvest generally. That's a typical cycle that we see. And I'm talking about agricultural commodities now, to be more specific. We saw some declines in the price of these commodities going into September, October. And then we see those declines continue to be maintained in November, going into the early part of December as we speak. But for some other commodities, we've also seen the movement back up for these commodities as demand continues to remain strong. The underlying thinking when we talk about commodities in Nigeria is a huge country, excess of 200 million people, and it's quite young. I think our median age is somewhere around 19 to 21, if I'm not mistaken. So that tells we consume a lot. We consume way more frequently than a number of other countries. So that means our demand for these commodities is significant. So if you go into the energy space, that's no news to all of us. PMS prices have increased all through the year, and I think we've had some declines in the last few weeks for PMS. LPG prices have also continued to go up. I can't remember the last time I filled my gas cylinder at home, but I think it's currently notching around 16,000 naira thereabouts. And I filled it sometimes early in the year at around 12,500. But then it's currently around 16,000. That tells you that the prices are also on the upward trajectory. For a commodity like gold has been racing through the year. Gold has been kind of like crushing all record highs. It crushed one in February, crushed another in, I think, June. It's currently at a record high as we speak, if it hasn't retraced a little. And that tells you gold combined international price combined with the exchange rate, you can then imagine what your jewelry box looks like. So keep it close. Yeah, that's how the market has performed generally during the 2024 year, more or less.
Thank you so much, Yusuf. For me, I know you've previously spoken about the risk profile of investors wanting to enter into the commodity space, but do you mind just quickly running through it again? Because I'm seeing a lot of questions, so maybe some of our audience members, missed that out, and they'd just like to know, what are the kind of risk, as an investor, investing in commodities. If you don't mind, just quickly run through the different risk profiles.
Okay, so most importantly, I think is what would be a major risk for you as an investor is not matching your risk profile to the kind of investment that you are partaking in. So let's say, for example, the commodities market. We know that the commodities market can be very volatile, just like Yusuf just alluded to just some few minutes ago. So there are some types of investment that you will do in the commodity space that you cannot make it a short-term investment the way you would typically do a mutual fund, a money market mutual fund, for example, and know that within 30 days you can exit your portfolio and make the returns that you want. So it has to really match your risk profile to be sure that what you're putting your money into, you have that capacity to wait if it's not very short and if it does not turn out to be very short tenured. And also because there's a price volatility that is ascribed to the commodities instrument generally. So you have the risk of entering into an investment and the price probably crashes on you. So you have to be able to take those risks, those calculated risks, and every of those investment decisions that you're making, definitely you have to be sure that you make due research on it and ensure that it totally aligns with your risk profile. And also, most importantly, I think as we grow older, there are some clients that are no longer earning income. And so basically what they are looking to get is some regular income, maybe on a biannual or whichever period that they're getting their income. So you have to be sure that the kind of commodities investments that you're entering into will be able to provide that, so that you don't have that liquidity need and you're unable to exit from that investment or exiting at a loss. So there are so many things that you have to consider generally. So you have to sit with a financial planner, someone that will look through all of these things, your age, the tenor, the kind of investment that you should even do. There are some ages that we would say, oh, at this point in time, you should be looking more to an investment that will give you guaranteed return as against a volatile investment like commodities market. So you need to be able to measure all of this risk and ensure that it just matches your own profile before you venture into it. But most importantly, because there are the professionally managed mutual fund, as in that can be commodity backed, it might also be a good way to enter into the market in bits and get to understand how it works, so that at least you mitigate some of this risk that we're speaking about.
Thank you so much for me. And, Bernstem offers, we have a host of seasoned wealth advisors to cater to your investment needs. So you can also tweet us, and then we would run you through your investment profile and look at what can be suitable for you. So on the back of that, we have so many funds here in Meristem, and an audience member is asking what will be the performance of this kind of, investing in commodities with variable prices compared to one of our most popular funds and the highest yielding in the markets, our money market mutual funds. So someone is asking, what would be the difference investing in something that has variable prices compared to with money market mutual funds?
So let me start. I think Yusuf would probably answer that question. But there's a general language that says the higher the return, the higher the risk, the higher the return. So if you're looking, you're trying to compare a money market mutual fund that has money market instruments in that have guaranteed returns. I think it's a little bit, it's not something that you should typically put side by side and say you want to compare, because there's that volatility that you would have in a commodities instrument that you typically do not have in a money market investment. So the money market mutual fund has returned in excess of 22% this year. And at the same vein, we've heard Yusuf mention the fact that we've seen like a 30% return in the first half of the year, and now it's typically, I think it's going a little bit down. So it's a little bit difficult to say that these are the kind of returns that you would expect from a commodities investment, but like it's something that it gives you that diversification, yes, and it also edges you against inflation. But most importantly, it is not they have low correlation, as in the two of them. So it's a little bit difficult to say that this is what you'll be expecting to get at the end of the investment. Yusuf, maybe you just want to add more to it.
You're absolutely correct. I don't think I have any other thing to add.
Thank you so much, Fumi. Yusuf, back to you. You have previously discussed what the year has how the year has fared in 2024, according to the question asked by our audience member. So this audience member is also asking, does the market look promising in year 2025, specifically for soft commodities, and also whether investing in gold is viable? So I'll just take that again. The audience member is asking whether the commodities market looks promising in the coming year 2025, specifically for soft commodities, and whether investing in gold is viable.
That person is a very smart question, because the person doesn't have to pay me to get my answer. Otherwise, the person would have reached out and then would have taken the conversation forward. But then I think on the soft commodities side, I wouldn't more or less generalize soft commodities. Within the soft commodity class of instruments of commodities generally, you have a few commodities that look like they would actually do well in 2025. Some of them may not actually do so well, but that's one other thing that we are able to do on our own end. Notwithstanding the general trend, we are still able to spot opportunities even within these commodities and then exploit them as the case may be. So that's one key thing that we should understand. But generally, I wouldn't say the soft commodity class would outperform, but I think a number of those commodities within that class would actually outperform in 2025. For gold appears to have benefited from a lot of factors in the last 1 year. So we've seen the crisis in the Middle East. We've seen a lot of tussle between the United States and Russia vis-a-vis Ukraine. So there's been a lot of geopolitical tension. There's been a lot of macroeconomic tensions, and gold has benefited largely from that. Will that happen in 2025? Maybe, maybe not. Also because China has also discovered a very massive gold deposit. Will they be able to bring it to life in 2025? I don't think so. But we also know that China has been the largest buyer. The People's Bank of China has been the largest buyer of gold in 2024. And we don't think they would actually continue buying at the same pace they bought in 2024 in 2025. However, the wild card here is how Donald Trump plays his politics in the United States, in my opinion. If Donald Trump adopts a very diplomatic, which we don't see with Donald Trump actually, if he adopts a very a negotiation-based system rather than a tariffs-based system, we may not see gold appreciate so much. But if he adopts a heavy tariff-based system, then we may see a lot of countries trying to diversify their reserves into gold and protect themselves from a scenario where the United States just takes very funny decision against some countries. So that's something that we should pay attention to. Will gold outperform the way it did in 2024? I don't think so, but I still think there are a few factors that could trigger it to move in the upward trajectory going into 2025. So it's something that we should actually pay attention to.
Okay, so that's noted. So no matter your investment profile or your, whatever you're invested in, the most important thing is always pay attention to news, pay attention to the commodities you invest in. So one doesn't just invest in something or buy something and then go and flip. That's not going to be very good for our portfolio. Thank you so much. We digress a little. Fumi, over to you. One of our audience members is asking, what are other investment instruments that Meristem handles as a seasoned web advisor?
Okay, so taking it a little bit away from commodities markets, we have various investments that clients can invest in Naira, in dollars, even real estate backed investments. So for the Naira space, we have the fixed deposits. You can invest in commercial papers, treasury bills, money market mutual fund, a fixed income mutual fund. We have the dollar fund investment. We have the dollar investment portfolio that you can invest in. So there are myriad of investments that you can actually do through Meristem Wealth Management Limited. But most importantly, you have to have an engagement with us so that we can match you with the right investment that will suit your profile and also suit your investment objectives. I hope that answers the question.
Yeah, thank you, Fumi. I believe that answers the question. And for the audience members, you can send an email, if you want to know any other thing about commodities to commodities@meristemng.com. And if you have any other inquiries, about the different investment products that Meristem has, just like Fumi has answered, you can also send an email to contact@meristemng.com. Thank you very, very much. We would like to also know, Yusuf, we've been talking about building a commodities portfolio. We've spoken so much about the different classes, ETCs, commodities lists, equity funds. So what's Meristem's play in the commodities markets?
Fantastic. So for us in the commodities markets, we are trying to be the go-to guy, more or less, for lack of a better word, the trusted partner in the commodities market. So for us, it's not just on the investment side because we see investors being able to benefit from the commodities market. We look at it from an ecosystem angle because, first of all, we believe that there's an ecosystem that needs to be nourished and sustained for those investments to continue to thrive, more or less. So on the one hand, we are working with companies across board, across the number of opportunities that they have. So financing for companies, it's something that we are doing. We are also working with companies to build resilient and strong supply chains. But in doing that, what we mean is that these companies need commodities. We're able to structure contracts with them and ensure that they get those commodities as at the time they need them, in the volumes they need them, so their supply chain can continue to be resilient. We also work with them in ensuring that working capital financing is something that they are able to benefit from. And then based on the conglomerate structure we have in the in Meristem, we have Meristem Finance House as well that is able to come in and provide some of this financing to these companies. On the investor front, it's providing investment instruments that take into cognizance the profile of investors, the risk profile of these investors, the risk profile of the commodities that we have as well, and ensuring that we're able to match those kind of things together. So it's risk and reward, matching the risk and reward, and ensuring that investors are more or less risk neutral. For lack, we can't be completely risk neutral, but close as possible to risk neutrality. We would like to deliver those kind of options for investors. So it's a two-pronged approach, ensuring that the ecosystem continues to remain nourished and sustained, whether through working capital financing or through some commodity trading structuring agreements that we have with them, and also working with investors to ensure that they have the appropriate instruments that cater to their needs at the end of the day. So that's how we approach the commodity space. So we approach it from an ecosystem angle rather than it just a niche or sidelined, one-sided approach at the end of the day.
Thank you very much, Yusuf. That's very, very helpful. Approaching commodities investing from an ecosystem angle instead of from a niche angle. So it's better, caters to all classes of investors and the different types of investment needs. Thank you so much. Someone is also asking here, in terms of risk, what would be the best and the worst among various commodity investments?
That's a tricky question. But then what I would like to say is, just like you can have the best and the worst equity instruments, it's always changing. You can have the best and the worst commodity instrument as well. It's a dynamic market. The best commodity instrument this year may not be the best next year. The worst commodity instrument this year may actually be the best this next year. So it's something that is highly dynamic. If you recall, I said at the beginning of the session when we're talking about risk is, number one, you pay attention to price risk before you get into the instrument. And when you get into the instrument, you also pay attention to the commodity to ensure that the facts behind that investment continue to remain valid. And that's something that we pay very close attention to. So there isn't a best, worst kind of dichotomy. It's a case of, oh, this instrument looks great. It looks good as of now. Invest in it. Tomorrow it's not so good again. It has lost all the shine, more or less, that we saw in it before, and then we exit that kind of investment, as the case may be. So it's a highly dynamic situation rather than a static and a rigid kind of approach.
Thank you so much for your answer. And you've also spoken about, how the year looks like in 2024, how it's going to look like in 2025. But that was just, in like general terms. And this particular audience member is asking to give percentages, drawing from the past 8 months, how has the market actually fared in terms of percentages, based on available statistics.
So the interesting thing in the commodities market is you have marketing years, not just the January to December kind of thinking. It's a little bit different, right? So like I said, if you recall, January to August was beautiful. Some commodities grossed above 30%, 35%. Between January and August. But then we saw September, October, we saw the retracement we typically see in the commodity cycle because of harvest coming in, and then commodity prices would decline. But then the season has just started. November, December is the early part of the season. We continue to monitor performance of these commodities. Unfortunately, I don't know, we should have the video of the last webinar on our YouTube channel, right?
Yeah.
Yeah, we have recording from the last webinar where we discussed what we think the outlook will look like. We discussed a number of scenarios that we think would play out. We have the best case, the base case, and the worst case scenario, depending on the number of factors that we outlined during that webinar. I would just urge that particular person to just go back to that YouTube channel, just watch it. If you want to actually move very fast, you watch towards the end. That's where we discuss the outlook. So I think that will be helpful for that person. It's it's actually kind of dicey to attach percentages to performance of any instrument, more or less. What you are focused on is the thesis behind the instrument. If I see that, oh, given all of these scenarios playing out, I think soybeans is a fantastic instrument, I go into it. If it hits, I have my target objective. So maybe my target objective is 15%. I hit my 15% and I review. I'm like, is it still valid? If it's still valid, I stay in it. It gives me another 10. If it's still valid, I stay in it. It gives me another 10. So that's how we typically review investments in the commodities ecosystem, rather than just saying, oh, I think these commodities will do 80%. I don't think anybody would. That's a wild guess, so to say, because something can happen tomorrow and that 80% is truncated immediately. So it's a review of scenarios and looking at, in all of these scenarios, which one do we think is likelier to outperform? And that's how we typically go into it.
Thank you so much, Yusuf. This has been such an insightful session. We have so many questions, but I believe I'll just pick one more before the vote of thanks. And I'd like to remind our audience, whatever questions you have about commodities, you can always send an email to commodities@meristemng.com, and your other investment questions you can send to contact@meristemng.com. For me, sometimes people confuse product and service. I have a question here, that asks, Meristem investment service, is it actually a product or is it a service? So just help us clarify that.
Okay, so for this particular one, like Yusuf mentioned when he was talking about how Meristem plays in the commodities ecosystem. So you can be a service and it can also be a product. So if Meristem launches the commodity mutual fund, for example, then it's a product. So that means that you're buying into that fund. So it can be classified as a product. But if you come to Meristem and then say that, okay, you would like to invest in some of the value chain that is available in the commodity space, then we are providing you a service, because we are then giving you the advisory service and also pointing you in the right direction and guiding you to make the kind of investment decisions that would be profitable and also give you some kind of comfort. So you can use it both ways. So if when we launch, I will not use the word if. When we launch the commodity mutual fund, then the products that you're subscribing to, or the exchange traded fund as in commodity backed, then is a product. But if it's then the other way, that you require the advisory services and need us to guide you on what to do in the commodities space, then we're providing you a service.
Thank you so much. Yes, that clarifies it very much, because sometimes it's very confusing for people which one is the product or is the service. So thank you so much for clarifying that. I'd also like to mention again, please use the link in the chat box for your feedback and also for surveys. Thank you so much, Yusuf. Thank you so much, Fumi. Thank you so much to our wonderful audience members for joining us in this webinar. Like was previously mentioned, this is the second in our series. The first one is available on our YouTube channel, meristemng.com, and this will also be available when we end for replay. So you can go back and listen to all the questions and all the answers that we're given. Thank you so much once again for joining. I would call on our head of treasury, Okimte Sakwa, for the vote of thanks. Thank you.
Good afternoon, everyone, and thank you, Fumi, thank you, Yusuf, and thank you to our esteemed webinar audience, our clients, and everybody who took time out from your busy schedules to join us today for this very, very enlightening session. I've learned so much. I'm sure you have too. Yusuf and Fumi have broken down a lot of information for us concerning opportunities that Meristem will help you unveil and unravel in the commodity space, how you can hedge your portfolio from inflation, how you can diversify your portfolio and maximize your returns. We are here to provide any information you would need after this webinar. You can click on the link in the chat box and give us your information, and we'll be very, very happy to respond to any of your inquiries and to meet your specific needs. We pride ourselves as a friendly company with up-to-date market information to grow wealth in for you in good time and in an atmosphere of transparency. So we're very, very happy that we are able to lead in this area of the market. It's relatively nascent in this market, and there's so much more opportunities to be unraveled in that space. And Meristem is very committed to being at the forefront, or one of the companies at the forefront of some of these developments that we know are going to happen in the commodity space. So thank you once again for joining this series. We look forward to hearing from you. Click on the link to give us your details, and we will surely get in touch with you. Thank you very much, and enjoy the rest of your day. Bye.
Thank you so much. Thank